Hi everyone. Today I want to share on the bad debts recovered and the accounting entries that are required. Right? To begin with, what are bad debts recovered? Yes, these are debts that were previously bad or not recovered, but a customer has unexpectedly paid the amount due. So it is necessary to follow these three steps in order to account for the bad debts recovered. Firstly, you rewrite the date, right? Rewriting the date means recording the amount as if you are selling to that customer for the first time on credit. The second step, you record the amount that has been received from the customer by debiting the cash or the bank account, and that customer will be credited with the same amount. Lastly, you treat the bad debts recovered as income, where it is supposed to be credited in the income statement. Let's look at this example. We have irrecoverable debts of 50, right? Then on January 25, the customer unexpectedly pays off the amount due. In this case, the customer is James. So let's start with the first principle. The first step is we rewrite the date in James' account. So how are we going to do it? We are going to debit James' account with 50, right? Then we are going to credit the bad debts recovered with the same amount to complete double entry. Right, the next step, we are supposed to record the amount that was received by debiting in the cash account, and we credit in James's account, right? Because James has paid off the date, we are supposed to cancel it. Third step, we are supposed to record the amount in the income statement because we said bad debts recovered is income. So it is supposed to be recorded on the credit side and a corresponding value on the debit side. Right? If we can check here, we have James' account with a debit and James' account with a credit. So what it means is that we can actually cancel that account because it's now zero. So we can cancel this account and this account. Then if you also check, you will discover that bad debts recovered here has a credit balance and this one has a debit balance. So the bad debts recovered account is cancelled. Why? Because we have transferred this amount to the income statement. That's a closing transfer. So the bad debts account disappears and James' account also disappears, right? So we'll be left with debit cash and credit the income statement. So meaning to say, we are going to debit cash account and we credit the income statement. So if there is a bad debt recovered, we are supposed to debit cash and credit the income statement. Thank you very much. See you in our next video.